Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 4th of June 2022, and we in the United Kingdom are celebrating Her Majesty's Platinum Jubilee. But nevertheless, we're still publishing our Gold and Silver Weekly Update for the week ending the 3rd of June. However, we shall keep this relatively short so that we can go back to those celebrations. With that in mind, let's take a look. Looking at precious metals first, we can see that gold fell $2 last week, falling from 1853 to 1851, having hit a high of 1874 and a low of 1829. In sterling terms, gold finished the week at £1,483, that's up £15, and in euros it closed at €1,727, that's unchanged, thereby suggesting, of course, that last week the pound devalued somewhat. Silver fell 19 cents, falling from 22.15, below that psychological barrier of 22 at 21.96. Having been as high as 22.50 and as low as 21.45. In sterling terms, silver closed at £17.59, that's up 5 pence on the week, and in euros it closed at 20.49 euros, that's down 0.14 euros. Of course, in dollar terms, the gold to silver ratio rose, and it rose from 83.7 to 1 to 84.3. Now, looking at the prediction we made last week for gold and silver, this is what we stated. This coming week, we're expecting to see gold trade between 1800 and 1900, with 1775 and 1925 as outliers. And we forecast silver will trade between 2150 and 23, with 21 and 2350 as outliers. Well, both gold and silver traded within our normal trading range, with silver temporarily dipping into our outlier range towards the downside for a very short period of time by just 5 cents. The difference between gold's high and low was $45, compared with the previous week's 28, and silver's difference was $1.05, compared with the previous week's difference of 79 cents. These figures, 45 and 105, are typical spreads for prices generally, although we have seen some exceptions to that recently. Now, looking at some of the other financials, Bitcoin rose $822 and currently stands at $29,594. Equity markets, though, disappointing, but mainly because of Friday. The Dow Jones closed on Friday at 32,899, down 348 points on the day and down 313 points on the week. So had it not been for Friday, the Dow would have been in positive territory. The S&P 500 closed at 4,108, down 68 points on the day and down 50 points on the week, so it too would have been in positive territory. And finally, the Nasdaq Composite closed at 12,012, down 304 points on the day and down 199 points on the week. And once again, as with the Dow and the S&P, had Friday been a benign day and no change, then all three indices would have been up rather than down. Looking at oils, Brent crude closed at $119.72, up 29 cents on the week, and WTI crude basically caught up with Brent crude almost, and closed at $118.87, and that's up $3.80 on the week. The dollar index stands at 102.14, and that's up 0.50 points on the week, so it seems to have stabilized above this 100 level. Now, as we mentioned in last week's update, there was a lot of economic data coming out this past week, and again we mentioned, and we're going to reiterate it for this week, that Friday would likely see the greatest market movements, and this is really what happened. During the course of the week, we had a mixed message in manufacturing, in that the S&P manufacturing PMI was lower than anticipated, though the ISM manufacturing index was higher. Services PMI and indices were also marginally weaker. Construction spending was lower in April, as were factory orders and motor vehicle sales for May. But Friday was the game changer. It was important because until then, the economic data that came out suggesting a softening economy and therefore potentially less incentive for the Fed to be too hawkish when the next FOMC meeting occurs. We could see that where gold and silver was showing very positive returns on Thursday, Friday it created an about turn. Why? The non-farm payroll report. There was an expectation of 228,000 new jobs for May, but the figures actually came out at 390,000, and this after a relatively strong April. And that was the game changer. And analysts moved from, well, perhaps the Fed won't increase rates by 0.5% when they next meet to, they're almost definitely going to do it. Let's take a quick look at the economic data coming out this coming week. Monday, nothing scheduled. Tuesday, consumer credit for April. Wednesday, wholesale inventories revision for April. Thursday, the weekly jobless claims and real household net worth for Q1. And the most important, on Friday, consumer price indices for May, including core CPI, and that will be month on month and year on year. And we also, to throw in for good measure, have the UMich Consumer Sentiment Index for June. So this week, all eyes on Friday, as far as economic data is concerned. Now, we stated last week that despite some dovish talk by analysts, we suspect the Fed will still remain hawkish in its next round of interest rate rises, because they like to see 3 months of data before changing perspective. And we also said last week we could be wrong, but we're still expecting some not so tasty medicine in the weeks ahead. In fact, this past week it was published by the CME's FedWatch tool that it is forecasting a 94.2% probability that the Federal Reserve will move forward with another 0.5% rate hike in June and an 87.2% probability that the Fed will raise rates another 0.5% during the July FOMC meeting, and we concur with that. That's been our forecast all along. The net result, if these forecasts come to fruition, is that the Federal Reserve will have raised its internal Fed funds rate from nearly 0 to 2% in just 4 months. And of course, the controversy then and the debate is, can it go any higher? We think it can. We can see it going up to 2.5%, and then it would become a little difficult between 2.5% and 3%, though we wouldn't rule 3 out completely, though we suspect we're going to see 2 to 2.5% being the sort of level rates will average out at. Now, going back to the technicals for gold and silver, we can see strong support for gold at the 1800 level and strong resistance at 1900. For those who like to delve into the weeds for greater accuracy, we have the first main line of resistance at 1894, which is when the 200-day moving average rests, and the first line of support of 1854, which is where the 10-day moving average lies, has in fact been broken. And then you have psychological support at 1850 and technically at 1825-ish underneath that. But in our view, 1800 is pretty strong. Short and medium-term momentums have turned positive, and the MACD has a positive trajectory, all suggesting higher prices for gold. Silver, however, is a slightly different kettle of fish, at least from a technical point of view. We have support at the 10-day moving average at 21.99 and resistance at the 50-day moving average of 23.26. So the key levels to watch are any break above 23.25 or below 22. Some analysts are predicting 21.50 all the way down to 20.50. Medium-term momentum is positive while the MACD histogram is in negative territory, thereby suggesting lower prices as opposed to gold's higher prices. Oh, the wonders of technical analysis. One could argue that with a slightly softening economy but rising inflation, the demand for silver could indeed fall for commercial purposes, thereby putting pressure on its price and especially if it's then faced with an aggressive Fed in a couple of weeks' time. So in view of all this, what can we really expect to see happen to gold and silver prices? Well, as far as gold is concerned, we're expecting to see it trade more or less between $1,800 and $1,900, the same as last week, with $1,775 being a very strong support level and $1,925 extremely strong resistance and an outlier. So 1,800 to 1,900 and 1,775 to 1,925 as outliers. We forecast silver will trade, and we're dropping it slightly actually, between 21 and 22.50, with 20.50 and 23.25 as outliers. If any of these are actually breached, it's going to be on Friday. We suspect that that breach will take place. Now, what are your thoughts on this? Please share them. Now, next week, we are actually going away on holiday. And so we will put out a report on Saturday. However, it's likely to be quite a short one. Hopefully, I'll be able to produce something Friday, and so it won't have encapsulated everything that's going to happen on Saturday, but I do want to get a video up, and then we'll be back the following weekend. So they will just be the weekly update, and I will try and make sure that I get that out before we go away on Friday. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to the channel. Press the bell sign so you're notified of our videos as and when they're published. And by all means, comment as to where you think gold and silver prices are going to rest in the coming week. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.